Welcome back to Power Lunch. I'm Mike Santoli, and this is Trading Nation. Investors are feasting on fast food stocks amid the recent market volatility. Names like Starbucks, Chipotle, and Jack in the Box seeing a bounce today and outperforming over the past month. So, should you stick with these winners or fade the gains? Craig Johnson is with Piper Jaffray. Gina Sanchez is with Chantico Global. Craig, it's interesting. These companies are not categorized as consumer staples, but it's almost as if the market treats them that way. They're steady and basically do okay in most economic environments. But what do the charts tell you about whether, in fact, they can hold these gains?
Mike, the charts still look constructive. And just before I came on air here, I had an opportunity to talk to one of the top Wall Street analysts in the restaurant space, Nicole Miller-Reagan, who just happens to work at Piper. And as I had a chat with her, she's making a bold call fundamentally, and the charts certainly support that. You've reversed the long-term downtrend off the 15 highs. You pulled back, retested your rising 40-week moving average, and it looks like we're setting ourselves up to test resistance at about the $500 level. A break above that, it's going to set ourselves up for a move to the new highs.
That's Chipotle
now,
we're talking about. Okay.
That's Chipotle. And then on the weaker side, Mike, I would just point out Starbucks. This stock has gotten well ahead of itself. It's overbought on a shorter-term RSI indicator. And this particular stock looks like it could come in about 10%, pull back down toward that $60 level, and that would be a better entry point. So I'm going to pass on the Starbucks now, but definitely ordering up on the Chipotle right now.
All right, Gina, any of these names seem like they could kind of win your backing right now?
Well, look, let's talk about just the broad industry in general. What happens when the markets get really defensive is these do trade like staples, as you mentioned, because you'll see people sort of dump the really expensive restaurants, and even kind of the mid-casual dining also gets hurt as well. This low end becomes something that you hide out in because you know that people can afford this stuff. Now, I think that if you look at valuations, you know, Chipotle is a stock that has been loved, and its valuation reflects that. It's 75 times trailing earnings, but the expectations continue to be positive, so maybe you can continue to grow into that. I think that's its Achilles heel, but this sector in general, this kind of low-end sector, and also just, you know, I mean, let's face it, Starbucks is an addictive substance. Of course, people are going to continue to go to that despite the competition. So I think that this sector continues to perform if the markets are volatile.
All right. Yes, customers can't do without this stuff, and maybe investors can't either. Gina and Craig, thanks very much. Appreciate it. For more Trading Nation, head to our website or follow us on Twitter at Trading Nation.
Daily price fluctuations of individual stocks can offer trading opportunities. However, if you're unhappy with your returns while trading actively, consider taking smaller positions over a greater investment time frame. Evaluating trends over multiple weeks rather than hours can help a trader locate more consistently tradable trends while possibly trading less frequently.